for the introduction. And council member, you are most welcome to this class. I hope you were present yesterday and you have been following. We doing budgeting using Excel, and we took a very common example to this, where we are starting some small business and we're trying to have a budget for 12 months. Yesterday, we progressed up to the income statement. I hope what I've shared on screen is visible to everyone out there. So we did our income statement up to the PAT level. So today we are going to move on with the balance sheet. And like I said yesterday, there's nothing really advanced about budgeting. All you need to know is be good at your finance, be good at your accounting, and be logical in what you do. Otherwise, if you are not doing that, then it becomes challenging. For participants who want the workbook and the presentation, I think these have been shared by the Institute. You can check your emails, but I've also shared the workbooks in my chat, so you can download and follow. I've shared both the open workbook, the one without anything that has been worked out, and the one up to where we stopped yesterday. So you can follow what we're doing if you missed, or if you just want to prove what you did by yourself, you can check what we did up to yesterday. So today we are going to move on with our balance sheet and cash flow, and finally see whether the balance sheet will balance or not, but hopefully it will. So we have already calculated our income statement up to PAT level. And of course, this PAT will link it to our balance sheet, that is retained earnings. So I'll just come to that line for retained earnings and just type in equals, and I come up here and pick my cumulative PAT here. Because as the months move on, this figure will become cumulative, and we have already calculated it in line 21. So I'll just pick it there and have it entered there, and then I can copy this up to all the way up to December. Okay. Then the other thing is, when we're doing our assumptions, we said we're getting 5 million shillings from the CPA Sacco. So that becomes our opening share capital. We have here equals, I go to my assumptions, the 5 million that I'm getting from the Sacco. I'll also use it as my share capital, and it is also my opening cash. I have no money. All I'm depending on is the Sacco to give me that money. So the moment they give it to me, it becomes my share capital, and it also becomes my cash. So we have those two. These are the opening. So from January, then we'll see how that works out. So let's start from up. We don't have any equipment, so we have no non-current assets. So there's no depreciation coming in here. But we have some assumptions for trade debtors and inventory. If we go back to our assumption sheet, you'll see that accounts receivable, which are our trade debtors, we're saying 21 days. Inventory, we are saying we shall have 60 days of inventory. And then accounts payable or trade creditors, we are saying 45 days. So for us to calculate that, if you remember what I showed you yesterday in the presentation, if I can pull it quickly here. In the presentation, we saw that you can compute your accounts receivable, inventory, and accounts payable using the assumptions for your days. So accounts receivable is based on your sales. Inventory, we'll base it on our cost of sales. So will be our accounts payable. So let's come here and try that. To ease things, I can bring the days here on the side so that you are able to follow easily. Trade debtors, I will say equals, I bring the what is on the assumptions, 21 days. Inventory, 60 days. So these are days, 60 and 21, these are days. So here for trade debtors will go equals. We have our sales up here, our revenue times our days for trade debtors or accounts receivable, and then divide by what we have in our assumptions, which is 365 days. Okay, but when you're doing this, you have to be mindful of your referencing, because like yesterday I told you, the biggest part of budgeting in Excel is to do with referencing. If you get your references wrong, then as you copy the formula, you're going to have some errors popping up, or you'll have figures, but wrong figures for that matter. So here we have said sales is in F5. So as I move to the right, I want it to go to G and H and so on. I'm not copying this formula down, so that reference is okay. Times the 21 is in column E. As I copy to the right, I want to maintain column E because it has my input there, which is 21 days. So I have to lock column E. So I'll put a $sign before column E. So it becomes $E29 times assumptions D37. That one must be maintained everywhere I go, whether up or down. So I change that to $D, $37, so that I don't lose it at all. So now when I copy this to the right, I should be having my debtors. Similarly, I'll do the same for inventory, but inventory, I'll compute it on the basis of cost of sales. So I'll go to my cost of sales, and because this is a negative, so I'll start with a negative here to turn it to a positive. So minus F6 times, so times the inventory days, E30. When I copy to the right, I don't want to lose column E because that's where my assumption is. So I'll make sure column E is locked. So that becomes $E30 divide by what is in my assumptions, the 365 days, and I make sure that one is locked in all directions. So again, I can now copy that to the right. Okay. So what remains now is my cash here. This will be the last thing to be calculated, and we'll see how it is done. Let me flag it with that nice color. I hope it does not offend some people. So I don't have any equipment, so here I can put my total assets, current assets. Just have that total for my current assets. And of course, equipment plus total current asset will give me my total assets. And that, and then we'll have that. So what remains for my assets is only the cash, which will come in as the last part of the calculation. So we have something, we are progressing. So next, share capital, this one will be maintained at 5 million. Remember to divide that figure by your 1,000, which is on the assumptions sheet. Otherwise, you'll end up having things that don't match. So equals that. You can also lock the D, since that is where your assumption is coming from. So then you can maintain this at 5 million. So now we took a loan for 1 year, so we don't have any long-term liabilities. Everything is repayable within 1 year. So we have current liabilities. I think the first one should be, just put this here. The first one should be trade creditors. So trade creditors, we have our accounts payable days, which is on your assumptions, and that is 45 days. And like we did for inventory, we are going to compute this on the basis of cost of sales. So which is equals to, we go to our cost of sales. So this is negative, so this should be a minus that figure times the 45 days, which we have put here. And make sure that is locked. Time divided by a 365 and lock that also. So now you can copy to the right and you have your accounts payable. Now short-term debt, this one we need to go and compute it from another schedule. So we come here, yesterday we did interest payment using the formula IPMT. Today we want to do the principal payment, and the formula to use is PPMT. The syntax is almost the same. What changes is instead of I, you have P. So the formula is almost the same, equals PPMT, and that formula returns the payment on the principal for a given investment or loan on a periodic constant basis. So the interest rate has to be constant. So here we have 3% for all the 12 months. And the payments are going to be periodic. That means monthly. So I open brackets. The rate, my monthly rate is 3%. If this 3% was annual rate, I would divide it by 12 to get my period rate. But since 3% is what I'm being charged on a monthly basis, and I'm paying back on a monthly basis for 12 months, so this becomes my period rate. So it becomes just 3%. And because I'm going to copy that formula, I have to lock that reference, comma. I'm computing the repayment for the first month. So I click on that one, I'm going to copy this formula to the right. So I want it to go to 2, 3, 4, and 5. So I will not lock that reference, comma. The number of periods is 12. That is 1 times 12. If you want to change later on the number of years to 2, so it is good to just say 1, lock that reference, times 12, and also lock that reference. Just to make it more dynamic, so that if you want to change from 1 year to 2 years, you don't have to come back and do a lot of work, comma. The present value, how much am I taking? How much is the loan? That is 5 million. I can now divide that by my 1,000, which is on the assumptions sheet here, so that I don't end up getting figures that are bigger than what I should be having. So the C3 is also locked. So those are the inputs for my formula. I enter. So the principal in the first month will be 352. These are in thousands. So I just copy that all the way up to the last month. Now, when you add these two, you should be able to get a figure that is similar all through. And that figure, if you wanted to get it before you even add up these, there's a formula to that, which gives you how much you should be paying on a monthly basis. So 502.31. So everything here should add up to that. Okay. So that is to just confirm that your computation is actually correct. The other way you can confirm is you can use another formula called PMT. So what PMT does is it calculates the payment for a loan based on constant payments and constant interest. So it will give you how much you'll be paying on a monthly basis. And that figure it gives you has a component of both the principal and the interest. So if we use PMT, we know our rate is 3%. The number of periods is 12. And the figure we are taking is that divided by 1,000. So if you enter, you see it is 502.31, and that's what we get down here. So that confirms that our calculation is actually correct and we can rely on it. Now, how do we get the closing balance? The closing balance will take our loan amount. We subtract the principal paid for that period. And as we move on, that principal paid will be a cumulative figure. So this is how we'll do it. Equals the 5 million. Of course, we need to divide this by our 1,000, which is on the assumptions. Okay. So that gives us just 5,000. Okay. So then we can just say equals plus, since this is negative, so this will be a plus, sum of the principal payments from the first one, which is in C9. So the first one will be C9 to C9. So you're just moving from the same cell to the same. But I'll lock the first C9, but the second one will be free to move. So that as I move to the next column, column D, it will be C9 to D9. As I move to column E, it will be C9 to E9. So I enter that. So this will be the closing balance in January. So as I move up to December, I should get 0. And you can see that at December, once I pay off my 487, the balance is 0. So that tells me that my formula is working well and I should be comfortable. So this is the figure we are now going to take to the income statement, to the balance sheet, sorry. So this closing balance will come to our balance sheet. Short-term debt equals, we go to the loan, pick up that figure. And then just copy that all the way to December. Accrued tax, this is coming from the income statement, equals, we had a line for tax. There in line 19, so equals F19, enter, and then copy that all the way to December, but should be a minus, not just equals, sorry. So this is equals minus. Okay. So again, we can now add up our total current liabilities together with the equity. So this will be that plus, oh, sorry, we needed to have this one here first. The share capital, let's first have this section added up. For our equity and retained earnings. So we'll have that and make it bold because it's a subtotal. And then here we'll have equals sum of these three. And we can also add in that section. So it's adding up this part and that. So when we copy this up to December, it should work out like that. So then we can now put in our check to see what is missing out that we should be looking for. So here, if you get your total assets, that row number 34 minus total liabilities and equity, row number 48. So your balance sheet is out of balance by those figures. And that's the figure we need to work out from the cash flow. So if there are any questions, I can have a quick look at them before I proceed to the cash flow. We are not going, somebody is saying also how to handle pivot chart, when to use them. We're not doing those today because as you can see, we are simply projecting figures for your balance sheet, income statement, and cash flow, and there's no need for pivot tables. The issue of locking needs to be emphasized. I've emphasized this right from the beginning that you can't assume to do anything in Excel until you've mastered cell referencing. Most people, unfortunately, claim to be good users of Excel, but still struggle with this very basic concept of cell referencing. Please, of course, the time we have here is not enough for me to go over everything. But if you want to be a good user of Excel, invest some time in learning cell referencing. There's a lot of material on the internet. You can Google, you'll see lots of videos, lots of explanations about the same thing. But of course, the more information you get, sometimes it gets confusing, but try to get there and try to get an understanding of what cell referencing is all about. That's what you people call locking. Because more than 95% of the errors in Excel actually start from there. Wrong cell referencing. So please invest some time, go over the internet and get a lot of material that will help you understand that concept. I normally, in other classes, we normally have that simple illustration of a cross multiplication table. And that's how we normally do our lecture on cell referencing. But for today, we will not go so much into that area because, as you can see, we have lots of stuff to do here. And cell referencing alone can probably take 30 minutes to 1 hour. And I don't think we have much time here. But yesterday I did go over it. If you're around, you must have picked some basics from there. Okay. Then,
Godfrey, excuse me.
Yes, please.
There is a question which came on our CPD email here from Ken. Ken Enabo. I want to read it for you so that you emphasize on the purpose of locking. He's asking, what is the main purpose of locking? And is there anything wrong if you don't lock? He asked at 11:33. I think
yes,
locking, as emphasized, is very important.
Let me explain it using what we have just done in this balance sheet. We have here 21 days for our trade creditors. Okay, we're using inputs from the cells, which is in F5. We're using the input for this 21, which is in E29. And we're using something from assumptions, which is sitting in cell D37. Now, if you don't lock, and this is what will happen, if I just come and say equals, I have my cells there, times, I have the 21 days there, divide by what is in the assumptions, the 1000, which is in sitting there. So when I enter for the first cell, so I said cells. So for the first computation here, the answer may be correct. But as you copy to the right, you see you start having errors. Why? Because now what you had in assumptions D40, the 1000, okay? Sorry, this should be divided by 365, not that. Divide by 365, okay? So here, when you just compute, it is okay for the first cell. If you are not going to copy that formula to another cell, then you don't have to worry about cell referencing or locking. But the moment you start thinking of copying that formula to another cell, then you should start worrying about what will happen to the references you are pointed to. For example, here, F5, which is your revenue. When you copy to the next cell, which is in G28, yes, you want it to go and pick the sales for February. So maybe for sales, you don't have to worry. But now for the 21 days, which are in E29, which is this cell here, When you copy it to G, you want Excel to maintain reading column E, which has your 21. Now, if you don't lock and you just copy to the right like that, you'll see that instead of E29, it is now reading F. So it has moved from where your reference was, which was where the 21 is. It is now reading what is in 300 and in column F 28, 29. So that causes errors because what the computation you're going to have is definitely going to be wrong. Then the other thing that is going to happen is when you did your formula assumptions, the 365 was in cell D37. Now, when you copy, if you have not locked that cell D37, when you copy, it is going to move to E37, and E37 is 0. And that's why you are ending up with a divide by 0 error. So yes, you have everything to worry about if you don't do correct locking, as you call it, or referencing. There are basically 4 types of referencing. There is the absolute, where you have a $sign before a column and a $sign before the row reference. The letter represents the column reference. The number represents the row reference. Now, when you enter your reference like this, it means whether you copy your formula to the right, to the left, up or down, it will maintain reading that particular cell because it is locked on both the column and the row. So it will not shift. So you'll maintain reading that particular cell. Then you have mixed column absolute. So this one will be $A1. That's how it will look like. So you have the column is locked. So if you copy a formula to the right, you'll maintain reading what is in column A. But when you copy this formula up or down, the row will keep changing to row number 2, number 3, number 4, because there's nothing locking the row. Then you have mixed row absolute. And this will be like $1. So what this one means is that the column, if you copy this formula to the right, will change to B, to C, to D, to E. But if you copy up or down, you'll continue reading what is in row number 1. It will not go to row number 2. It will maintain row number 1. So it can change to B, but to remain B1. It will go to C, but remain C1, whether you copy the formula up or down. Then you have what they call relative. And relative is the usual one that we just have as A1. So this one just moves. It's what we have just done here. All these are relative. Nothing is locked. So the choice of which one to use in your formula depends on how you want the inputs to behave. For example, in this what we did here, I know F has my cells, okay? And when I copy this formula to the right, I want to maintain going to the next column so that I pick up the cells for February. I leave it to go to the next one. I pick up the cells for March. I know I'm not going to copy this formula down, so I don't worry about the row. So what will happen to F5? I will just leave it. Then I have the next input, E29, which is the 21 days. Now, when I copy to the right, I don't want to leave column E because that's where my input is. If I don't lock column E, it means I'll go and pick 303, which is wrong. So I have to make sure that column E is locked. Now, how do you lock? You can either put your cursor in the position you want and type in the $sign. That is okay. Or you can use F4, function key 4. Looks like I'd lost network. Am I now back? Ambrose?
Yes, sir. You are now back.
I'm now back. Thank you.
Yeah.
So I was saying,
you can share the screen now. The screen is shared. Yeah. Thank you.
Okay, let me share it. Is it visible?
Yes.
Okay. So I was saying this reference that is in E has to be maintained at column E. And I was trying to demonstrate how you lock. And I said you can either put your cursor in the position you want and type in the $sign, just like that. Or you can use the F4 key. So the first time you hit your F4, it will bring you an absolute cell referencing. The second time you hit the F4 key, it will give you a mixed row absolute. And the third time, it will give you a mixed column absolute. And the fourth time, it will take you back to relative. I don't know what is happening, but the network is not stable. Maybe the technical team can look into that. The technical team should organize something better than this because it's not good for us to be on and off. Let me share the screen again. Okay, so we said column E, because it has our input, as we copy to the right, should be maintained. So that's why you lock column E, but you don't lock the row if you want. Then what is in the assumptions on the assumptions sheet sitting in cell D37, this one should be locked in both directions. So that as you copy, you remain reading the 365 days, which is in cell D37. So I hope that explains why you should lock and how important locking is. Let me see if there is any other question before I move on. Ambrose, have you seen any new question? Other than requests to share the presentation? I had already shared that workbook, and I'm sure the technical team here is already sending out emails. So please check your email. I'm told they have sent the workbook and other materials to you.
Ambrose, there is a hand from Ronald Karema.
Okay, we can give him an opportunity.
Ronald, go ahead. Ronald, are you online? Okay, let's move on. I think maybe sometimes you click somewhere and you forget you have done it. That's the challenge we're having with these new technologies. So we need now to go to our cash flow. Our operating profit, this one is coming from our income statement. So equals, that is your EBITDA line. So I'll go equals that 748, enter it there. Depreciation, I don't have depreciation. Increase, decrease in current assets. So here we have to look at our current assets. So we'll just do a simple equals sum. So we do what was in the previous month minus what is in the current month. So I'll do sum. No, current month minus previous month. So I'll do what is in that, the trade debtors and inventory, comma, close brackets, minus. If I had not put my assumptions here, then I would use this. So since I don't have what is coming from the previous, I will leave out the minus. Okay. Should be the other way around. 564, because we have current assets, but we didn't have anything in the previous period. So should be an increase. Now in the next one, we shall just do equals sum previous minus current, sum of those two minus the sum of that. So the sum of the opening minus the sum of the current month. So I hope you are able to see that. I'm not bothered about locking because this one will keep moving. So as I move to March, it should be looking at the sum of February and the sum of March. So all the way up to December. So that's why this time I'm not bothered with referencing. Okay. So then this one I just copy all the way up to there and to work itself out. Then current liabilities equals sum trade creditors, short-term debt, accrued tax. So those three. And then for the next period, it will be equals sum current month minus previous month. So this minus sum of this, close brackets, enter. And then I'll just copy this all the way up to December. And then interest paid. We did this interest, it is in our income statement. It is also on our loan schedule. So I'll just come and pick that interest. Copy all the way up to December. Then we can add up to get our cash from operating activities, because this should have also gone to December. So then we add up that section. Okay. Then we go and do the next section. We don't have anything coming from investing activities, so there's nothing there. Issue of share capital, we'll start with our 5,000 there. What we said, we got a loan and immediately put it as our capital. So this is our 5 there, but I'll divide that by what I have on my assumptions. Okay. So going forward, I'll maintain the same figure. No, I don't maintain it here. It's just coming in once, sorry. It just comes in once, doesn't go forward. Proceeds from borrowings, we also got a loan, which is in our assumptions, divide by. It also just comes in once. Loan principal repayments, this one is in our loan schedule here. And we are doing that. And we'll carry that all the way up to that. So when we add up the I keep losing network. I don't know what the problem is. I thought being here at the institute was going to give me better connection, but seems not. So we are going to add up that section for financing. So we add that. And we take it all the way up to December.
Godfrey, you may share the screen.
Oh,
yeah.
Sometimes we forget these things.
Yes, so that means from the point of the time
adding up that section.
Yeah, thank
you. And the I think I need IT to sort this out. We're losing a lot of time with these interruptions, but that is technology with us. So maybe let me share the screen again. Is it okay now?
Yes.
Okay. And my apologies to the participants for the network that is very unstable. So now we just need to get our net decrease or increase in cash, and that is we'll just add up the subsections we have above. So we'll have our cash from operating activities, plus if we had cash from investing activities, we'd also pick it there, plus what we have from financing activities. Okay. And we have that. And we know that our cash at the beginning was 5 million. Okay, participants, bear with us. Is it the same thing? Okay, we want to change connection, maybe to give us a more stable network. Please bear with us. Ambrose, am I on?
Yeah, you may now go ahead and share the screen.
Okay, let me do that just shortly. Is it on?
Yeah, it's on.
Okay, let's hope this time it doesn't throw us out again. Okay. I think this share capital part was not supposed to be there. Just correction to that. So net decrease or increase in cash, we'll just copy this formula all the way because that adds up your subsections, your operating cash from operating activities, cash from investing activities, and cash from financing activities. Okay, so then copy that across. Okay, and then we have our opening cash. Say equals the 5 million, which we have in our balance sheet up here, divide by what is in our assumptions, the 1,000. Okay, so increase in cash plus that, if we add up these two, should give us our closing cash, and our closing cash becomes the opening for the next period. And we now then continue moving that. I hope this should be able to help us carry this figure to the balance sheet. Cash, if I come back to where my yellow is here, equals 13,029. And I know where the problem is. Okay, 13,029. If I check up here, I think I'm off by what I've reported in my loan. This figure here is exactly my loan figure, short-term loans. Is there double counting somewhere? That's what I need to investigate. So let me go to my cash flow again and see what is happening. Share capital, the proceeds from the loan, fine. What I'm repaying. That is okay. I think the problem is from here.
Godfrey Vitalis would like to highlight where the error is.
Yes, please.
Yeah.
I'm
Vitalis,
all
you can
ears.
go ahead and speak.
I can't hear anything.
Me too. I see his mic is open.
The issue is to do with this short-term debt. I think it is counting in here. It shouldn't be part of that calculation in my cash flow. That's where it is, and I just need to adjust that and we'll be fine. So if I come here and just get move this short-term debt, let me move it to here so that we able to isolate it. That's where the problem is coming from, and delete this line. Oh, it still comes the same. Okay, plus. It is not part of this calculation here. So that works out. It's only in the last year that I'm failing to balance, in the last month. So once I isolate the debt from my current liabilities, and then I'm able to work out nicely. But then I also need to come and find out why am I not balancing in the final year, because this also has to be sorted. 5265. It also has to do with something in my, maybe I didn't copy a formula somewhere up to December.
Godfrey, can we give an opportunity to Samuel?
Yes.
Thank you.
I'm listening.
Samuel, please unmute and you talk.
Hello.
Yes, please.
Yeah, Godfrey, thanks. I think the issue is coming from share capital, because we got a loan at the start, but the shareholders didn't bring in share capital. So if we consider share capital and we consider the loan, that is a double entry by 5 million. Because we debited our cash, we credited the loan. Yeah, so the share capital should be 0.
So you're saying this line should be 0?
Yes, that's when we shall balance.
But we have already balanced even with that line there. If I isolate this, okay, let's do it the other way also.
Because when you look at
I'm open to ideas.
Okay.
When
you look at the cash flows from financing activities, we didn't receive any amount in cash from shares, but the proceeds we have, it's coming from the loan we got. Because in the cash flows, you made it 0, meaning even in the balance sheet, share capital should be 0. Yeah. Then we consider the short-term debt, like we use the first approach you had used.
There we are. We still have the same problem. So when I remove the share capital, it actually goes even worse.
Because you had changed the formula in the cash flows. You eliminated the loan.
Yeah, I've returned it. It is here, short-term loan. It is back. So this 5,000 has to be there, because that's where what is helping us open this business. The loan is just going down. We're paying it off. So unless if you are suggesting that whatever we pay now, we bring it as share capital, which is not going to work. So if we remove this for now, we get a better and add in this and add in this figure. Of course, our 5,000 was eliminated here. We'll bring it back. Equals assumptions that. So that works out. Now we need just to get why aren't we balancing at this point? What is the problem with that month 12? Okay. So I need to check, did I not copy a formula all the way? For example, there's this one stopping in November. It should have reached December. That could be one of them.
Vitalis has a proposal in the chat. You may check that. Is the last item.
Okay, there's just one item that we need to sort out. That is this tax element here, because we accrued it in the last month. If you look at our income statement, I hope the formula was working correctly. That is correct. Did we put our retained earnings all the way up to December? That could be another issue. They're there. The loan has been paid off. So it is this tax element which we need to understand why it's behaving the way it's behaving. Okay. Okay, let me see what could be wrong from that tax part of it. Okay, maybe somebody has figured it out. You can share as I also figure it out. Okay. Any feedback out there? Somebody figured it out? Current liabilities, F45 to 47.
Godfrey, someone is back.
Yes. Go ahead. Samuel? Samuel? Is he back?
His mic is open. Maybe there is a challenge of network.
Maybe. Samuel, please unmute yourself and speak to us. Ambrose, can you unmute him? Ambrose?
Yes, sir. We can give an opportunity to Vitalis. CPA Opoya, please go ahead and talk.
Okay, we can take some questions as we sort this out. Any questions as we sort this out that I can answer? I get a message here on my private WhatsApp. Andrew says, please remove the tax from your, he says, remove the tax component from your increase in current liabilities. That's what he's saying. So if that.
Hello.
Andrew say, yes.
Yes, Godfrey. This is Samuel.
Yes.
Yeah, the issue is coming from the accrued tax. Under our current liabilities,
yes,
we considered it. But again, when you look at our operating profit, we had netted off the tax expense.
Yes,
yeah, so
that's what Andrew is also saying. He's saying, please remove it because it has already been taken care of.
Yeah.
So let's do that. I think, yeah, that I agree. That should be able to sort the problem. So if I now change this, what is this I'm getting? Okay. It is here. Yes, that should be able to sort it. Thank you, Andrew. Thank you, Sam. I think that sorts it. So members, I think we have gone through all our 3 financial statements, the income statement, balance sheet, and cash flow. And sorry for the interruptions in the network. I think we have covered this pretty fast. So we have quite a number of minutes for questions that I can answer. And please restrict them to budgeting. Don't take me into other areas that are not on today's menu. So members, I'm waiting for your questions. Sorry for that. And thank you, Andrew, and thank you, Sam, for identifying where the problem was coming from. So we're double counting our taxation. So we have sorted it. And as you can see, our balance sheet is balancing all the way up to December. The beauty is once you have done this, you can change the assumptions and everything will still balance. For example, if I now came and changed, instead of 2,000 average population visiting that mall, and I change it to 3,000, I'll still come back to my balance sheet and it is still, the numbers will automatically work out and everything will automatically balance. Even if I came here to the assumptions and maybe changed the prices, any of these assumptions that are in blue, any of these can change and it will not affect how my budget on the other side works out, because all these are just merely inputs. As long as the calculations are well done the way we have done them, then we should be able to have things working out nicely. Now, the next thing, if you remember from our introduction, we said once you have done all this nicely like this, you may want to group certain parts. So maybe you want to, up to there, come to your data tab, your group and outline. Just group. Then you come to your balance sheet. You also group it. Then you come to your cash flow and also group it. So you can always come to balance sheet. I didn't group it properly. Group, cash flow, do the same. So you can always freeze them and you can always open up the section you want and view it. The other thing we said is that after all this hard work, remove your grid lines. They're just a guide. So you come to view, grid lines, remove those grid lines so that it is just a plain sheet. The other thing, if you're going to copy this to another program like Microsoft Word, make sure that your columns are fitting well. You don't want extra large columns. So fit the columns properly. Most times reduce the font, change the font Calibri. Normally I am interested in using either 9 or 8, so that when I copy these things, wherever I'm taking them, they don't give me a lot of headache fitting. So the font Calibri, font 9 or 8 should be able to help you carry your information to either Microsoft Word or PowerPoint. So after all this, you may want to protect your formulas so that nobody comes and messes them. So by default, all cells in Excel are supposed to be protected. But you can choose which cells to protect and which ones to unprotect. So when you put your cursor, like now on this 3FS sheet, because this is where most of my calculations are, if I click where I select the entire sheet, that intersection there between the column and row. So I select the entire sheet, then I go Control-1 to open the Format Cells dialog box. Then I click on Protection. I can choose what to protect. So first I'll make sure that the locked and hidden, nothing is locked, so that everything now is open for editing. Then I can now close this, say okay. Then come to Home tab, find and select. Then I go and pick formulas, so that I'm only picking out my formulas. Then I can now go again to Control-1, protection, and I say the formulas will be locked. So I select locked, and that is okay now. So when I come here and say review, protect sheet, and I put in a password, so these formulas will be very well protected. So that's how you lock your worksheets. And once you have done that, it should be okay. Let me see if there are any questions in the chat or in the Q&A. Ambrose, do you have any for me? Revisit retained earnings calculation.
No.
Somebody's Jean Ekubu Kenneth is saying, during cell referencing, can you pick figures from any sheet? For instance, when you are filling share capital figure in the statement of financial position, is it a must? Oh, is it a must that you get the figure from assumptions, or you can even copy from loan sheet or any other? As long as you have linked these figures nicely well, and that particular figure is coming from one particular input and the other ones are simply referring to that, it's okay. You can always pick them from the nearest position you want. So if I know that my 5 million has one particular input, which is on my assumptions, and that if I change that, everything changes, then that's fine. You can always pick it from wherever you want. Then locking formulas, people still want more on locking formulas. I thought I'd explained myself well on that. Somebody says, please show how you can hide formulas. Why do you want to hide your formulas? Okay, just like what I've done. Review. So if I unprotect this, so after you have done like what I've just done, you select this sheet and then you go to Control-1. You pick out that protection. And of course, first, you want to make sure that everything is not locked. That's okay. Then you come to your Home tab, find and select, pick out formulas. So you see only where there is a formula, that's where it is highlighted. Where there are no formulas, there's no highlighting. So again, you go Control-1, protection, so you can lock, and if you want to hide, tick that box there, hidden. So when you say okay, and then you come to your review and protect worksheet, you put in a password and you do that. So these formulas are not visible. So when I click where there's a number, you see that in the formula box, or formula bar, there's nothing there. It's hidden. But like I said, when you do these models, you're not doing it for yourself. You're doing it for probably a lot of other people out there who want to examine what you have done and probably be comfortable that what you have presented is actually accurate for decision making. So please don't hide those formulas, unless if you're doing it for your own use and maybe in your small hustle somewhere and you don't want people to know what you're doing. But if you're doing it for a larger group, maybe you're in a big organization, maybe you're in, please don't hide these formulas. People need to know. Your model needs to be transparent for people to know what you have done. Okay. Any more questions that I can answer here? Shall we be able to get the recording? I think yes. The Institute will share that. How can you easily use that budget we have made to assess performance? Budget versus actual. I had not planned to do this, but since I have some few minutes left, it does not hurt sharing what we can do here. So I have my budget here. So for example, I don't know whether I have anything here called actuals. Let's say I have actuals here. There's a hidden sheet there called actuals. So let's say I have actuals here, okay? So for example, I may want to say, I want actuals for January compared with actuals in the budget. And then I may also, maybe if I'm in May, I want actuals for May compared with May actual. And then year to date up to May for actuals, and then year to date for my budget. I didn't intend to do this, but let me just do it for you here. So what we'll do is for income statement, I have January up to December. Okay, so let me open a sheet somewhere here. Maybe I call it performance. And I'll copy these headings. Just put them here. Okay. So I'll have here month actual. Actual, and then budget, variance. Then I'll have the same here. So this is for my month, and this is for my year to date. So what will happen here is if I want the month January, I know I have 12 months. So I will assume January is number 1, February is number 2, all the way up to 12. So what will happen is I need to get these figures here. So this will be for the month, and this will be for year to date. So I need a formula that will pick a month that I will specify maybe in this cell. Say if I want February, I put a 2 there, okay? In this cell here, D1. So I need a formula that will look at D1 on that worksheet and tell me this person is interested in the second month. If I put a 5, it tells me that person that I'm interested in the 5th month. So that formula is a combination. For the month, it will just be simple. I'll use that same formula. It is called offset. So equals offset. Offset is like what you used to do in geography, reading of coordinates, move from this position, so many degrees, you'll find this. So here, offset works almost in a similar way. You give it a starting position, and then you specify how many rows or columns from that position you have specified, Excel should move to pick the figure you want. So here I'll say equals offset. So equals offset. The first thing it wants is from where. So I'll use E because E is not any month. It is before January. So I'll start from E9, comma. It says how many rows should I move? I don't want to move any rows, so I put another comma. And then it says how many columns should I move? The columns to move will be on the performance. It is that cell, and I lock it. Close brackets, enter. So you see, in that cell, we have put number 2. I think it is number 2. So you see, what it has done here is it has moved from where we specified as a start. It has moved 2 columns and picked that figure, 404.92. Of course, this one needs to be rounded. So I'll just come Home tab. So let me just remove this protection. Okay. So here I need to have it for 0493. So that is, it will pick the month I want by just changing what is on the other side. And then of course, I will link this to what is on this side. So this one will just copy all the way down for the income statement and balance sheet. And maybe even your whatever. So I was doing this for I was starting from the balance sheet. Okay, let me copy this up. So this is month. Now for year to date, is a bit tricky, but not very tricky for as long as you have mastered this one. For year to date, you are going to again start by saying equals sum. Okay. So you want to start with sum of what is in January up to offset what is in E or you can even say January itself, no problem. You don't want any rows. Columns is what is in your performance. D there, F4, close, close. But of course, this will create a double counting. So you need to, when you say performance, you need to remove 1 here, -1. So that steps back and only adds January and February. So that is 14,956. And you can see it 14,955.75. So if you round this or you format that number properly, it should be able to give you that. So copy down. It's only for income statement. You don't need that for your balance sheet. So you are done. So you come back to your performance. So you can either use your VLOOKUP or just say equals, since these are the same things we copied. I can say equals that figure there. So you do this for the budget and also for your financials. So for the budget, you'll again go and do what we have just done. And then here you'll just have your equals. This was budget, sorry, these were budget figures. This was your budget. So if you have any actuals, let me just pick some figures at random. So if these are my figures randomly brought, so your variance is your actual divided by budget -1. I hope they are all in the same. These ones need to be divided by 1,000. These are in full figures. So what we may have to do is just multiply this by 1,000 so that we ease the calculation. So there you are. Then you can go on and bring in your conditional formatting to give you some arrows and some words, some pointers of what to do. But ideally, what this does is that if now I want a budget of say December, I just change this to 12, and you'll see that my budget here changed to December. If I want any month, I don't have to go and bother myself looking for those figures. I just change the month here and automatically this changes. I hope that has been a helpful bonus. It was not part of today's menu. Yeah, but it's good to know. Okay, Ambrose, are you still on? Ambrose?
Ambrose is not on.
Yeah, I
guess
think,
you are through.
yeah, I've come to the end of this presentation. I thought he had been, but let me just go through the Q&A and see if there's anything I can answer. Okay, somebody say highlight on the use of if error. Yeah. Okay, so after doing this variance calculation, you notice some places it returns divide by 0 error. So for you to avoid that, you can use the if error function. And what you do is you have your calculation here. What that formula does is it says if there is an error in that calculation. So if there is an error from this calculation, okay, then return what? I'll put double quotes to mean a blank. So when I put double quotes, it means just return it as a blank. So if the calculation D5 divided by E5 minus 1 results into an error, return a blank. That's what that formula means. And so when I copy this down, you'll see that where there was an error, it's now just a blank. That formula helps you manage some errors. Of course, if you are going to use what you're returning in this calculation here, instead of a blank, there are times when you need to return a real number, maybe a 0, so that you are able to do your computations normally. If you just put a blank, sometimes it also disorganizes, depending on what kind of calculations you are doing. But if it is as simple as this, you may just want to show a blank. Let me see if there's any other I can respond to. Somebody is asking, where am I found? If you come to Bukoto Chirabo Complex, room 204, that's where I'm found. There's Data House, certified public accountants there. You'll either find myself or someone else will attend to you there. Then can we access the full recording for ease? Yeah, full recording will be shared. Somebody is saying, please share your contact. I'll flash it before I move out. Let me just share that because I'm not near share. Let me share the contact. So it is on the screen. I hope you are able to see it. So that's a contact. Chats. Thank you very much. Asante sana. Is it possible to contact you directly? Yeah, you can. My contact is on the screen. The webinar contents will be shared. Yeah, thank you CPAs who have spared your time to attend this webinar. My apologies for the interruptions in the network. We try to do everything possible to reach you, but this is the new normal. I guess those are the challenges we face. Yeah, if you want any further training, please contact us directly. We can discuss how to help you or your organization. But this is just an eye opener to you that Excel can do wonderful things without you actually using any of the so-called advanced formulas. I think you have seen we have been able to achieve what we have been doing in the last 2 days with very simple formulas. But the key that you must go back and ground yourself in is cell referencing. You don't do that, then everything you do will be prone to lots of errors and sometimes becomes very challenging. So thank you very much. Have a wonderful weekend. Over to ICPAU. I hope JB is on the line. Maybe he has some housekeeping issues to announce. Thank you.
Yeah. Thank you, CPA Godfrey Kakala. On behalf of ICPAU, I would like to thank you for the partnership and for the rich presentation over these last 2 days. The participants have enjoyed and have appreciated that Excel is a very powerful tool which they can use in their workplaces. And we thank you for being magnanimous and giving us the bonus for measuring performance. As you mentioned, a lot of skills have been picked, especially cell referencing, locking, protecting, the formulas. We think we have gained a lot over these 2 days and should be able to apply them when we go back to our places of work. I would like to thank the participants for sitting in. The numbers were great. We almost hit 300 at some point. I believe this makes your work easier as you go back. Once again, I want to thank you for attending this webinar and wish you a blessed weekend. Thank you.
Okay.